Hey everybody, this is Evan Carthy from evancarthy.com, and we're going to go over the markets real quick and what I'm looking at going into next week. So we're going to start off with the SPY, the spiders. And it's just an ETF that follows the S&P 500 because this one gives us the best idea of where we're looking at the market going into next week. So using this is a on the 15-minute chart. This is the pitchfork trade that I've been using, and I also started using within it the 1.146 Fibonacci extension level on it, as well as the 1.618, because after doing a lot of back testing, I found that this is a valid level for you to look for to get entries in there. But we can talk about that here in just a second. Because how it works is we just use these semaphores right here, orange, red, oranges and reds again are the highest. They're the third level, oranges are the second level. So to have a red, you have to have an orange within it. That's why you can use an orange, red, orange one for it. So what we have is using that semaphore, that semaphore, that semaphore, and all there are is pivot points for it. And what we're looking for is when the price, we'll take this Fibonacci tracing level off real quick, when the price closes above either the 1.146 or the 1.618, that signifies that we're looking for an entry signal to get in. And then the entry signal is when price comes back and hits the line. So as you can see right here, using the chart, we had a complete close over it right here. This one was really close. I didn't consider it to be completely closed out of it since some of it was still on the line. So just waited for the next one, and it closed right here. So then the very next candle came back down, hit that line right there. So that signifies that this is a live trade. So then what we do to look for the original exit point is we just draw from the low of the move up to the high, which is that candle where it came back and hit that line. So the original target we're looking for is going to be the bottom of the orange lines right here, which is the 1.146 level. So that was the original level we were looking for right about here, 459. But as you can see, price continued to move down. And so when price, there's two ways. This black line right here is the exit. So normally I put it right here to let me know there's the entry, and here could be the potential second entry level or second exit. Price keeps moving down. So price obviously didn't go up there and hit that, so it kept moving down. If price had gone and hit the midline right here, that's when you move the exit to the black line, which is the original entry level right there. So you move the exit from the 1.146 down to the original entry level. But price kept on going lower, and it eventually did hit the black line down there, but it hit another level, which I'll draw the box here. This is the opposite way of the 1.146. It's opposite way of the 1.146 to 1.414 extension level, and this seems to be kind of like whenever you get a move going the opposite way where it doesn't hit the original target and just keeps on going down, his extension levels the other way. This seems to be the support base for it, and that's what happened here. We had that day where I talked about this in another video, just seeing how when the market opened right here, we had that huge sell-off, and you see right here we have a huge gap that it needs to come up here and fill as well. So that's another magnet looking for it. That didn't come up, but let me remove that as well. So when price, since we're into the pitchfork anymore, so when price comes down and hits this level, the Fibonacci extension level is the opposite way. When that happens, we move the exit up to the 50%. I used to keep the exit up to where the original entry was, which would have been, I believe it was that one right there. But after just, again, doing a lot of back testing, I found out, and most of the time it does go up there and hit that, but there is a couple instances I saw where price would just come up and hit the 50% retracement level from the opposite way and then go back there and turn around. I think it was in the, especially in NASDAQ where I saw that one. But anyways, so when it hits this level, then we move the exit to the 50% right here. So that is the exit level we are looking for right there. I'll go ahead and move the black line down there. That just shows me where I'm looking for the exit for right there. So when it hits that the other way, that's what we're looking for. So I think it'll go higher than this just because it's come up here and fill this gap up here, especially a gap that big. It'll eventually come up and get filled because as you can see, look, we had a big gap up right here, right there, and then look what happened. Price actually gapped down below it to complete that gap right there, but it created another gap, right over here they're looking to fill. So when price came down here and hit this area right there, there's the support area, kind of walk around there 1, 2, going on 3 days, but now price is popping out there pretty good. You know, we got a 0.8% gain right there, and it's even going off a little bit further as we're speaking right now. S&P is doing decent today, getting close to being a full percent gain. We'll see if it gets there or not. But if it doesn't go up there and fill it today, then going into next week, we're definitely looking for more upside here in the spiders, which is also the S&P 500, which would be about, let's see here. What was that? That was 1, 2, 3 when the day closed on Tuesday. So let's see here. Tuesday right here. We expect to go up somewhere in this area right here. So with price currently at 45.55, we're looking for it also in the S&P 500 to go up here in between. And it still has this little gap to fill right there as well. So something about, you know, close to about 4,600-ish right over there for the S&P 500 for it to go be filled. And then we just want to do a quick recap on the markets. But actually, let me go to Bitcoin real quick. So I actually want to show you Bitcoin. Bitcoin is in the same sort of setup as the spiders and the same sort of thing where we see the pitchfork trade. You see price broke using these semaphores right here. Price came up, broke above it, closed above both of the 1.618 and 1.146. Now it did create another semaphore pair, but it closed and created the semaphore, so it's still valid. If like the semaphore got created before it, without it closing up above, then it would invalidate it because we're just using the latest semaphores. So then, as you can see, but price didn't go up there and hit the extension level. Obviously, it came down and hit the midline, which moved the exit to right here. But then price continued to go down and hit the extension level the other way. And as you can see, same thing as the spiders. This has been used as the kind of support box for it for, gosh, how many days now since it originally hit it down here? So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14 days is going on right now of just wallowing around and getting a ton of support down over here. So we're expecting a pop here in Bitcoin as well. It's currently at, what is that, 29,425, and we're looking at going up here to this black line, which is 31,040. So same setup as Bitcoin, as in it's in the hourly chart for the Bitcoin, and then in the spiders SP 500 ETF is in the 15-minute chart for it. So here we have the SP 500, and we can see that today, for instance, it's just now going up into the previous day's extension levels, because I was like to use these high and low from the previous days. Use the extension levels for it, because most of the time when price hits these levels, that's where we see some pushback for it. When it's up top, when it goes down below, we usually see support. Now, earlier this week, there was a huge blowout day where it just ignored it at all, and so then, so it's going up there now today. So wouldn't be surprised if we start seeing, you know, especially coming up Friday at lunchtime right now here in the U.S., seeing the momentum kind of wane out and stall heading into the weekend. Let's see, going into, there's Russell 2000. This one, okay, this trade just got completed right here. So this is another one. This is actually on the 5-minute chart. So if we go over here, we can see it right there. Right there. Which ones do we use here? Oh, no, I'm sorry. We use this one, and this one. So price came up, broke above the 1.146, and then broke above the 1.618, so we just wait for the retracement. There it is, hit it right there. So the initial entry level was right here for it, and that put the exit right there. Price kept on moving back down, never hit the, excuse me, that was one going the other way. Never hit, you see the midline down here, and never came down and hit, I know there's a lot of lines on here, I'll just remove that, and never came down and hit the extension level the other way, 1.146, which is also pretty close to the previous day's extension levels as well. So the exit remained up here at right there, and it just got complete, you know, about 5-6 minutes ago. You see I took some trades down in here, got in I think right around here-ish, got out here earlier because I was thinking it may come back down, and I was going to get back again and just ride a what's it, you know, up and down type of day right there. But market's popping off a little bit, so went up there, completed it right there, and that is that one right there. So it completed that one. Plus, now it is getting very close to going into the previous day's extension levels, kind of like the S&P 500. So looking for that kind of momentum to really start slowing down a little bit here. I mean, it could keep going up, but typically, especially on Friday afternoon, when you start seeing these levels, we'll see people take their profits and head off to the weekend. Dow Jones, same sort of thing right here. Using the, actually this is on the 15-minute chart, what it was on right here. I think it was, yeah, 15-minute chart. 1, 2, 3. Price broke above it right there, but it kept on going up this next candle, so that's where you used for the high. Came down and hit it. That was the original entry level. A great entry would have been getting in right here, obviously at the 50% level, because that was definitely awesome support. Even better was 61.8, and then all this was a measured move right here. Pretty much is what it was. Going up, hit the measured move, going up, hit the target right there. So that one is completed for the Dow Jones, and it is also, just like the other ones, now squarely in the middle of the extension levels. Oh, real quick. Okay, cool. So the 15-minute chart right here, this one thing I was looking at earlier, we are in a, we do have a live setup right here in the 1.146, but if price keeps on moving up, closes above I'm assuming that's the 1.146 line, so it is left trade right there. But if price keeps on closing up above the 1.618 pitchfork line, there you go right there. If it keeps on going up right there, then we'll use that one as well. Then all we do is wait for the next candle, or if it keeps on going up, we wait for the price to come back and hit the line, and that's the original entry level. But we can go ahead for this one and put on the Fibonacci levels. You know what? I'll keep the 23.6 on there. It's fine. So we'll do that. So if price goes up there, closes above the 1.618, again, we'll just wait for the next candle, or at least a candle, to come back and hit it, and that will be the original entry level. I typically don't get in that level. I wait for a pullback if that's going to happen. But it is valid. If it doesn't do that, it still is valid for the 1.146 trade. So we'll just wait for that to come back and get hit. But yeah, this one's kind of a lot of movement right here. I mean, in a perfect world, what I would love to see right here, because I'm not going to take this because there's too much room for it to go down. But in a perfect world, let's just say, that stops as the high right there. It comes back. It never goes above the 1.618. Comes back, hits that. But we just get a huge sell-off all the way down to right here, 78.08, all the way back down there. I'd be a huge buyer in that, because then the exit would be right here. Let me just draw off. Say it comes down and hit that. Say we just get a huge sell-off, goes all the way down to there, and then hits that. So you get it right there, and that moves the exit to right here, the 50% to 80.84. So that would be a really nice, over $2.70, 270 ticks on the oil market right there. Not saying that's going to happen, but that's really what I'd be looking for. The earliest I'd be looking at getting into this would be, we would still need a sell-off right here, over $2 sell-off. If it coming down somewhere between the 50% and the 61.8, that would be my original entry. I'd be looking at getting in, but the exit would get moved from here, the 1.146, down to wherever the original entry level would be in, which would probably be like somewhere around here. So that's what I'd be looking for. Is I wouldn't get in right here, just because the drawdown for it would be too great for my risk to reward to what I'm looking for. Price also, as you can see, see these teal lines right here. I'll take off the Fibonacci levels. Price is also hitting in that right now. It really hasn't slowed it down at all right there, but would expect it to here on a Friday. Last but not least, NASDAQ, just like every other market today, they're amazingly enough trading in tandem. It's going into the extension levels for today, so expect that thing to stop. But going into next week, again, just looking for more positive move up until at least the spiders get hit at about $455, but I expect to go a little bit higher to fill that, which is about $456, which coincides with the S&P 500 going up here, getting closer to the 4,600 level up there for it. So yeah, going into next week, expecting some more positive momentum, at least earlier in the week, and then after that, we'll see what happens. All right, everyone, be safe out there. Thanks, bye.